Congrats on getting through the day. Huge LNG targets, in particular of how much it's going to make up in terms of your business, 20–30% larger by 2030. How do you get there?
Yeah, thanks, Alex. Look, we're very proud of where we are today. Today in the Capital Markets Day, we took a pause and reflected on the journey we've been on over the past couple of years. And the key message was one of trying to instill confidence. Here's a company that has delivered what it said it was going to do and actually over-delivered in certain areas. And beyond that, as you rightly pointed out, we've also today laid out a vision out to 2035 that has LNG at the heart of it. We believe LNG is going to be a critical part of the energy system, and we want to be the leading player in LNG. But our story also has lots of richness around wanting to sustain material liquids production and being the most competitive and the most focused energy marketer and energy trader in the world. And so a holistic story that I think we're very proud to be able to say is well on track.
Are you worried at all about a potential looming LNG supply glut and kind of betting really big on this for the next 10 years at a time where there's just too much supply coming online?
Look, in my job, I have to look at 20 years. And what I see when I do that is up to 2040, we see a potential 60% increase in overall LNG demand. We have a diversified portfolio, both of production sources as well as demand options. And we are very much looking to leverage that global diversity of production and customer contracts to be able to create value. Importantly, our LNG portfolio is heavily linked to long-term contracts that are tied to Brent, which means we have a lot of resilience. And so we can ride out the inevitable cycles in this business while making sure that the underlying cash flow continues to come from this business.
So what should investors look for in terms of the capacity increase on your LNG output?
Very much what we outlined today, which is 4 to 5% per year, so indeed the 20 to 30% by 2030, and that's just to 2030. We see more running room beyond that. We have projects that we can evolve over and above that. But what's unique around our LNG business is not just the production piece. We are actually also selling roughly the equivalent amount, not just of what we produce, but also another equivalent amount to that, because we're also one of the largest optimizers of LNG in the market. And so in any year, we're selling around 60 million tons of LNG, which is significant. And so we are trying to continue to build up our portfolio to really have that diversity and to be able to make sure that we can continue to essentially stay in the 15 to 20% of the overall LNG market is what we represent.
So once you get to 2030, Wael, what actually happens to the oil side of this business?
So we have a very clear pathway to sustain our liquids production to the tune of around 1.4 million barrels per day between now and 2030. And we have plans to extend that plateau well into the future. So we already have plans in place for that. And so the key areas where we see growth at the moment are our integrated gas business, as we've talked about, LNG, but also I would say our marketing business, our mobility business, which is the leading franchise in the world, our lubricants business, which is another core part of our overall value proposition. So those will be growth trajectories, and our sustained liquid production will allow us to have the fundamental underpinning that continues to keep us as a scale company overall.
Sustained liquids doesn't sound like growing oil production. And you know this is my way of asking about, you guys don't have Permian assets.
So what we have is a very diverse portfolio. We have the largest position in the Gulf of America. We have the largest position in Brazil, which are the two premier deep water basins in the world. Right? It requires a lot of running just to stay flat. So these portfolios are declining anywhere between 4 to 6% per year. So one has to stay running fast just to stay flat. Beyond that, we will look at opportunities, and we will continue to look at those opportunities. But of course, we've left the Permian, and we believe that the opportunities we have in front of us in the Gulf of America, in Brazil, in many of our heartlands like Kazakhstan, Oman, Malaysia, those are the places where we want to continue to strengthen our portfolio.
The analyst notes about today were all relatively positive. RBC said a really nice quote, said, "Today reads as more evolution than revolution." And I'm wondering if the revolution part is what investors need to see to have Shell shares start to outperform the likes of Exxon as well as Chevron. And would that evolution be buying a U.S. gas producer, doing some sort of substantial oil deal?
I think there's a couple of dimensions to that question. I'm very pleased with the evolutionary nature of it, and it's important that one footnote in all that discussion is that we have bought back around 20+% of our share register over the last 3 years. And a big part of what we announced today is we will continue to preferentially lean towards buybacks, having indeed increased the overall distributions to 40 to 50% of our CFFO. On this trajectory that we're on, we will have quietly bought another 40% of the company by 2030. To me, the revolution is not in singular actions. It's in looking at the life cycle over a period of 7-8 years. If we can buy more than half of this company, that is what is truly going to be differentiated and transformational for our shareholders.
So, while I do want to ask you, though, about just the general structure. I mean, a lot of in terms of the cash giving back, there has been a lot of discussion in analyst circles about this idea of why we haven't seen more balance between the dividend versus the buybacks relative to some of your competitors.
Yeah, it's a great question. I think the first thing I keep getting asked is, can you grow your overall share of distributions? And thankfully, we've been able to move from 20 to 30 to 30 to 40 to 40 to 50. So big tick there. Then indeed, it's the balance of how we want to return capital. It's a point that you both made earlier, which is we still find that our fundamental valuation does not fully price the cash flows we see into the future. So what a great opportunity to be able to use every marginal dollar of distributions to be able to buy back our shares and create that life cycle value for our shareholders. By the way, we have increased our dividend per share by 25% over the last 2 years, and we have a 4% progressive policy around our dividends. So we are addressing the dividend, but today the right capital allocation option is to go into more buybacks, and that's what you see us doing.
Investors also, Wael, have also, I guess, pondered, if not asked the question, about your listing. Obviously, your primary listing overseas. You're standing there on the floor of the New York Stock Exchange. Has there been any sort of meaningful discussion, thought, consideration about making the U.S. your primary place of listing?
There has been, and indeed we made the decision a couple of years ago to move our listing our headquarters over to the UK. At the heart of it, our focus is to make sure that we are driving the fundamentals up. To me, that means growing the free cash flow of the company. Yes, listing might add different liquidity, but we're already very liquid here in the US. Over 50% of our shareholder base is a US shareholder base. So we are attracting many of the investors that believe in the investment thesis we have. And so while we focus today on making sure that we're pulling every lever to build consistency, to build resilience, and to build longevity, of course, we keep all options open. Right now, a change of listing is not a live discussion, but it's always under review, and of course, we'll look at it when the time is right.
It feels like a no for now, Wael. I'm just going to paraphrase that. Going back to M&A for a moment, you're going to love this question. But when it comes to, say, BP, I know you get a lot of questions on when, if, how are you going to buy BP. But I want to approach it from another angle and talk about synergies. A big part of your outperformance in the past couple of years has been synergies and weeding out those costs. At what point does BP become so cheap you just cannot avoid looking at them for those synergies?
Alex, you'll forgive me if I don't directly answer that question, but what I will say is our focus over the last 2 years has been to build fitness and strength for Shell. Right? Today, people are asking the question because they see a fitter, stronger, more dynamic company. And that to me is great. We want to be able to build flexibility. We've been able to bring our net debt down to essentially the lowest it has been, excluding leases, for over a decade. We've been able to outperform our peers in the sector on both TSR as well as just pure share performance. And we are generating free cash flow in a very robust and solid way. And so today we have options. At the same time, when we think about those options, the priority is to deliver that 10% free cash flow per annum growth within our business. That's immediately within our control. And of course, we will keep an eye out for opportunities, but I have to say the bar is high. Because if you're going to go for a big acquisition, one has to recognize that that can potentially distract, and therefore we're very focused on making sure if we do something in the inorganic space, that the bar is high and that we go in ready to do that.
That also kind of felt like a no. I'm just saying, from where I sit. Yeah.
I would qualify it, Alex, as it's finding the right time to make the moves in what is a long journey for us.
Okay, but is BP like on the road to the moves, or is BP like on the highway somewhere that you're not passing?
What I would say is we are always looking at companies both in Europe and beyond, and every company will have its time, and at that point we'll make a decision.
All right, well, I'll get you off the hook here and give Alex a break for a second. I do want to get your thoughts, though, on just broader economic conditions globally. And I have to ask you, of course, about what's going on here in the U.S. politically. And I know you don't have a lot of exposure to assets here, but obviously what we do here has ripple effects across the world. Have you actually had a chance to actually meet with anyone from the administration, including the president?
So firstly, just a correction. So our biggest capital employed globally is here in the U.S. We are the largest producer and operator in the Gulf of America. We are the largest off-taker of U.S. LNG of any company. So we have a very material presence, not to mention 13,000 staff that are very much the core of our company here. I have had the opportunity over recent weeks to indeed meet many in the administration, including the privilege to meet the president. And what I would say is we are very encouraged and welcome the strong support for the energy sector, not something that has always been there in the US or beyond. And I do think the energy sector is a critical underpinning of any successful economy. Beyond that, what I would say is what is key for our sector, for companies like ours, is predictability in the investment climate and the stability of the investment climate, because many of our investments have payback periods usually above 7-8 years.
Yeah.
And so that is a critical part of being able to have the peace of mind to make the material investments that we need to be making.
Well, before we let you go, if there is a peace deal between Ukraine and Russia, are you anticipating Russian gas flows to Europe, and how are you seeing the global flows here?
Difficult to call where that ends up playing. I mean, what you find, of course, is Russian gas to Europe has gone down from roughly 40% of Europe's demand to just under 10%. So potentially some flows will occur. What we are focused on is making sure that through our world-leading trading capability that we have, that we are managing all these potential discontinuities that we are seeing in trade flows. And so we want to make sure that we can deliver to our customers. How the situation in Russia evolves is anyone's guess, but we are preparing for multiple different scenarios so that we can honor those trade flows that need to be met.
Wael, we really appreciate you taking time for us. I know it's been a long and busy day. Wael Sawan there, he's the CEO of Shell down there in downtown Manhattan.